Hello and welcome to the channel. I'm Tom. This is the TMP Group. Today is Sunday. It's December the 2nd, 2022. Happy New Year's to all. Appreciate you stopping in. Real quick, let you know I'm not a financial advisor. This is not financial advice. No members of the TMP Group are licensed brokers. We're just individuals that have committed ourselves to finding opportunity in the stock market, trying to generate and create generational wealth. Pass the knowledge that we have on to others and help others gain that same success. And there you have it. That's about it. So I do recommend that you do your own due diligence. Anything that you hear on YouTube, including myself or anywhere else, form your own opinion, make your own decisions, and that way you will become convicted in the stocks that you buy. Okay, jump right into it. So 2021 was a very volatile year. I think we'll see some more volatility in 2022. But we do want to have an opportunity to offset that volatility with some comfort stocks, if you would, some stocks that we can, as the thumbnail said, we can buy and hold and we can own for life and not worry about them through the ups and the downs and know that they will continue to outperform the market. So I put together a list of what I call a Super 7, and the Super 7 stocks that I'm going to talk about today. I'm going to show you, for the most part, all of them except for maybe one or two pay a dividend. They're not heavy dividend stocks, but they're a combination of growth and dividend. So we're going to get the best of both worlds. But these are stocks that I firmly believe, and again, my opinion, that we can put into our portfolio. We can continue to dollar cost average into them and not worry about having to sell out of them. And we can keep them on a time horizon, of anywhere from 3 to 5 years and get excellent performance. So before we jump in, I do want to point out there's a link below to two trading platforms. Obviously, if you don't have a trading platform right now that offers fractional shares, I would recommend that you jump into Robinhood or Webull. Both of them will give away a free share of stock to you when I think you deposit $100. You get a free share of stock. I get a free share of stock. And then there's also two links to one to crypto.com and one to Coinbase. Promotions with both of them as well. But the reason I bring that up is some of the stocks I'm going to talk about today carry a high price tag, and I know that for many people it's tough to understand, but if a stock costs $1,000 and as a fractional share you can buy $100 worth, if that $1,000 stock goes up 10%, you make 10%. If you put $100 in on a fractional share and it goes up 10%, you still make 10%. So that's why I'm not afraid to promote, if you would, both Robinhood and Webull. They're very user-friendly. I also recommend TD Ameritrade. TD Ameritrade is where the TMP holds its main accounts and where I hold my main investing account. The link is down below. If you like what you hear today, leave me a thumbs up. The thumbs up does help with the YouTube algorithm, helps get the message out to more and more people. And if you want to subscribe and hear more, if you already haven't done that, hit subscribe, share it with your friends, your family. Try to come on every day. Try to bring you the ideas and the thoughts behind what the group is doing here, behind what I'm doing personally. I open up with the day and date every single time so we can timestamp the video. You can go back to it. You can see my successes and my failures. And we sure have both of them. But if the successes outweigh the failures, we're doing okay. All right, so 7 stocks that I call the super stocks. Again, when I look at investing in a stock, I want to invest in something that I know and that I understand, and I would highly recommend that you do the same. Okay, don't go out and buy lottery ticket stocks. If you want to buy and win the lottery, then go to 7-Eleven, Circle K, wherever you live. I'm here in Arizona, and pick out a lottery ticket. Do not use it as an investment in the stock market. Although some of these lotto plays have the tendency where they can 10x and 20x, but for the majority, most of them do not perform, and most of us get tired of it, get out of it before we see the benefits and move on, and we end up losing. So I want to give you some stocks that you can just get into, you can sit on, you can hold, you can throw money at every week, every day, every month, however you choose, and do it over the course of time. Stocks that we understand, stocks that we know. Okay, first stock I want to talk about trades under the ticker symbol of KO. It is Coca-Cola. Now, Coca-Cola is not just a beverage product, but it's also a consumer goods product and consumable foods product company. Coca-Cola has been around for quite some time. It has a dividend right now, and it's been paying a dividend over 25 years of roughly 3%. I believe it's right around 2.9% right now. Coca-Cola currently trades at $59. And if you pull up a chart on Coca-Cola over the past 5 years, you'll see that Coca-Cola has gone from $40 to $59. That's roughly a 42% over 5 years. Through good times and bad, Coca-Cola continues to outperform the market over a 5-year period. So I put Coca-Cola, K-O, into my list of Super 7 stocks that we can own and hold, buy and hold and own forever. Okay, the next one is Johnson & Johnson, trades under ticker symbol J&J. Now, as I talk about these stocks, you're going to find that most of them are not the kind of stocks that you're going to see on Reddit or that you're going to see trending on StockTwits. They're typically not going to be in the news very heavily. They are kind of sleepers, but they perform. Johnson & Johnson, I think we all know, this company has been around for a long time. It's been around since 1886, and J&J is a well-established company. It's been paying a dividend over 50 years, and it's been increasing its dividend continuously, and the current dividend sits right around 2.5%. Interesting thing about Johnson & Johnson is it's not just a pharmaceutical play, but it's also a consumer products play. But Johnson & Johnson has the highest credit score rating on Wall Street, rated by Moody's. I thought that was very interesting. And the only other company I'm aware of that received that same ranking or rating was Microsoft. So Johnson & Johnson, J&J, there's number 2 on the Super 7. Moving on to number 3. This is a company that if you open your kitchen drawer where you store all your junk, or you go out to your garage, you look in your tool chest, you'll probably find some of their products. And the company is 3M, trades under a ticker symbol MMM. Now, 3M has been around since 1902. So it's been around for 120 years. And it has paid a dividend out over the past 60 years. And the dividend currently is about 3.25%. 3M is a consumer goods packaging and product company, and it is a conglomerate, meaning that it has a bunch of small brands under one name. For example, if you look at your Scotch tape is made by 3M. If you're looking at your Post-it notes, we refer to them as Post-it, but they're 3M. So very widely spread, very diversified company, has a ton of products. It's able to raise its prices through a recession or with inflation. And 3M deserves a spot with that dividend of 3.25 to be in our list of the Super 7 buy and hold stocks to own for life. 3M has been flat. It's been flat over the past 5 years. It's yielding a 3.25%, but it's roughly been flat. Johnson & Johnson, I neglected, and I'm going to go back. Sorry to digress. But if I look at a 5-year chart on Johnson & Johnson, Johnson & Johnson 5 years ago traded at 115. It closed on Friday around 170. So that's a 48% over 5 years. That's what we're looking for. We're looking for 5-year gains. Okay, let's go on to number 4. 4 is a lot like number 3. And this is ticker symbol PG for Procter & Gamble. Procter & Gamble is the oldest of the companies that I'm talking about today. It was established in 1837, and Procter & Gamble pays out a dividend yield of 2.3%. It's a consumer brand and product company as well, and it also has the ability that I mentioned with 3M to raise its pricing with inflation, and consumers will continue to buy the Procter & Gamble brand. Most of Procter & Gamble products have to deal with beauty and cosmetics and skincare, body care. Procter & Gamble, we love it, and we do put it into the Super 7. Let's look at Procter & Gamble. Procter & Gamble 5 years ago, $90 you could have bought Procter & Gamble for. You try to buy it on Monday, you're going to pay $160. That's a 91% increase over 5 years. 91%. Okay, all we want to do is we want to beat the S&P. And so the stocks I'm giving you here have a very high growth over 5 years, plus they're paying out a dividend. But I told you not all of them will pay dividends, which moves us to our next one. And the next one is Alphabet, trading under the ticker symbol GOOG for Google. So Alphabet / Google. Why do I have it in here? Alphabet, Google does not pay a dividend. They are focused only on growth right now and asset allocation and asset appreciation. There's not one day that goes through my life that I don't jump on Google. Google is best of breed, best of class. We can take a look at Google's 5-year performance, and it's amazing that to think 5 years ago we could have bought into Google for $800 a share. $800 a share. Wow, Tom, that sounds real expensive. Well, take a look at it today. $2,900 is what you'll pay for one share of Google right now. So $800 is quite the buy. Is that growth still ahead of us? I firmly believe that it is over the next 5 years. I see us doing nothing but speeding up, not slowing down, and technology will lead the way. Whether or not those stocks will get beat up over time, I think that they will, but I think Google is best in breed. Now, if you take a look at the 5-year on Google, it's amazing, okay? 800 to 2,900 is 272%. But look at the 2020 dip. It didn't even affect Google. It was as if Google wasn't even involved in that. So Google is very resilient, and although it does not pay a dividend, I do believe that it deserves a position in the Super 7, stocks to own for life. All right, so let's move on to the next one. The next one is Apple. Of course, I've got to talk about Apple. Apple is one of my favorite companies to own. As Jim Cramer says, we're not supposed to trade it. We're supposed to own it. I've been burnt a few times trying to trade Apple. Finally, I've given into the discipline I should have and just own Apple and continue to buy shares of Apple. When Apple's at 140, I might buy 2 shares, 3 shares. When Apple's at 170, maybe 1 or 2, depending on the time, basically just depending on where I am in life. But if you can continue to add into Apple every single week consistently over a 52-week span, and you're buying a couple of shares at the end of the year, you end up with 100, 200 shares of Apple. You're doing just fine. Okay, so let's take a look at Apple. Apple was established in 1976. It has a nominal dividend. It's not paying too much. It's just over 0.5%. But they have been increasing over the past 7 years. So they're looking to pay back, but they're also looking to reinvest in growth. It's definitely an asset appreciation and growth stock. And one of the things that I'm coming to learn about Apple, and I might be the last one of the party, but I look at Apple as a technology company, as an innovation company. Not long ago, there was an interview with Tim Cook, and he asked the person interviewing him, where do you see Apple, or what do you think Apple will be remembered for in 2030, 2035? And of course, the answer was the iPhone 13, the iPod, earbuds, virtual reality, you name it. And Tim Cook said, no, we will be remembered for Medicare. Not Medicare, but Medicare. And talking directly about the wearables, the Apple Watch, how the Apple Watch can predict and show us what's happening with our bodies before it even happens. Before there's a stroke, it can help us out. Before there is a heart attack, it can help us out. If our blood pressure is up, our oxygen levels are down, if we need to get up, if we're not sleeping well. The Apple Watch is simply amazing. There's been commercials on lately. If you've been watching any of the football games, you see the Apple Watch commercial where the gentleman is out on a paddleboard drifting into the ocean, and he's able to call for help from his Apple Watch, where there's a lady that is trapped in a car underwater, and she's able to call from her Apple Watch. I just think Apple is a fantastic company. Warren Buffett has said that Apple is his second largest business. He owns so many shares of Apple, and even with a nominal dividend, it pays him so much that it is his second largest company. So Apple, yes, belongs in the Super 7 best stocks to buy and hold and own for life. All right, the last one that I want to talk about is a company that we should all be familiar with. And again, all these companies I think we're familiar with, but the last one is Walmart, trades under ticker symbol WMT. And Walmart, rich or poor, we go to Walmart. Walmart is there for us when we need it. And if you don't go to Walmart, don't worry about it because everybody else is going and the stock continues to rise and continues to run. Oh, actually, before we go into Walmart, let's take a look at where Apple was 5 years ago and where it's at right now. Okay, so 5 years ago, you could have bought into Apple. This is sad, $30. $30 a share. Today, Apple trades at $178. That's a 510% increase, and we don't see Apple slowing down. Okay, jumping back over to Walmart, WMT. We know that it is the grocery and retail wholesale chain, largest in the world. Walmart buys and sells so many products that you can't put a number on the SKUs. At least I can't. But Walmart is definitely a solid company. Been around since 1962. Okay, so 1962 to 2022, it's been around. It's paid a dividend out for the past 48 years. So the past 50 years almost has paid a dividend to its shareholders. And again, a dividend is a percentage of the company's profits divided by the amount of shares times the amount of shares you hold. And that is paid out over the past 50 years, 48 years, in the amount of an astonishing 1.43%. So not a ton, but if you own a ton of shares of Walmart, and they can add up. It is an asset appreciation company, and it pays its dividends out quarterly. Walmart, 5 years ago, you buy into Walmart, $65. So 2017, you could pick Walmart up for $65. If you try to buy it Monday at market open, you're going to pay right around 142, 143, depending on where the market opens. We're looking at about 116% increase over 5 years. So I've given you 7 stocks. I've given you Coke. I've given you, that's 42% over 5 years. I've given you J&J, that's 48% over 5 years. I've given you 3M, which has basically been flat. Procter & Gamble, 91% over 5 years. Alphabet, aka Google, that's 272%. Apple, 510%. Walmart, 106%. Look at the 5-year trend. Now, I do want to throw a bonus stock in there. It's not really a stock, it's an ETF. It is the Vanguard VOO, trades under ticker symbol VOO. And basically the VOO tracks the top 500 US companies, the S&P 500. Now listen to this, almost 30% of that fund is made up of roughly 10 stocks. And they're 10 stocks that I love, 10 stocks that I talk about. If you follow the channel, if you made it this far in the video, you know there are 10 stocks that we are constantly adding onto our positions onto. And those 10 would include Tesla, Apple, Berkshire Hathaway, Nvidia, Facebook, Microsoft, Alphabet / Google, JP Morgan, and Amazon. Now, it's an ETF that also pays a yield, and the yield is 1.25%. The VOO, 5 years ago, if you just parked your money in the VOO, I'm not going to do anything. I'm going to wake up. I'm going to park my money in the VOO. I'm going to continue to dollar cost average into it through highs and lows. You could have bought it at $200. Friday, the VOO closed at $435. That's 110% return on your money. So, like I said, we don't need to go out and buy scratch-off lottery ticket stocks. Invest in stocks that have proven themselves time over time. They're not going to be the most glamorous. They're not the most sexy stocks, trendy stocks, but they are stocks that will make us money. And when we are creating generational wealth, and that's what we want to do for our families and our families' families and build that wealth chain, these are the stocks that I want to be into. All right. Question that's asked, Tom, I can't afford to spend, $3,500 on Amazon, or I can't afford to spend $170 on Apple. That's why I recommend getting into an account where you can buy fractional shares and then you can add on to it. If you go back and look about a month ago, I did a DCA challenge on Amazon where I bought one full share of Amazon, and then I DCA'd over the course of 7 weeks at $500 a week to buy into that's Amazon's. The price was $3,510.88. And the DCA worked out better because Amazon dropped down below 3,400. So fractional shares, nothing wrong with it. Build a portfolio, create generational wealth, make the bet in yourself, bet on your future, invest in your future, do your own due diligence, do your homework. I hope that some of this has hit home, pointed you in a direction that maybe you weren't looking at before. Get into some solid stocks that you can sleep at night. We call them the sleep at night stocks. And I do like to make my money work for me. So when I go to sleep at night, my money is working. I wake up in the morning, it's working as well. Hope you all are having a fantastic 2022. The market will open in about 12 hours from now. I'm excited about the last 2 days of the Santa Claus rally, and I hope you are as well. And I hope to see you in the next video.